Recently, I came across a strategy known as the 3-bar pattern introduced by DataTrader. This strategy claims to generate $100 per day. But there was one problem with DataTrader's video. He didn't present any backtest results in his video. So I took it upon myself to put this strategy to the test. In this video, we are diving deep into the 3-bar pattern strategy. I will explain the exact rules, backtest the strategy using one of our premium scripts, and finally reveal my optimized version of this strategy that's proven to be highly profitable even with trading fees factored in. Hello everyone and welcome to TradeSmart. If you are into algorithmic trading and trading bot automation, you are in the right place. So make sure to subscribe and turn on the notification bell if you don't want to miss our upcoming videos. Without wasting any time, let's get right into it. To demonstrate the strategy, I will use the US30 or Dow Jones 1-hour chart, and I will focus on the long setups only. Let's go over the specific rules for a valid 3-bar pattern and the rules of the original strategy. What exactly is the 3-bar pattern? For long positions, we are looking for a very specific candle formation. First, the igniting bar. This is a candle with a relatively large body. To objectively identify this, I use the candle height in percentage indicator. For example, on the US30 1-hour chart, an average candle body is around 0.2%. So, for igniting bar, we are looking for a candle with a body that's at least 0.2, but preferably 0.3% or above. Second, the pullback bar. Following the igniting bar, we want a red pullback candle. The body of this candle should be no more than 50% of the igniting bar. Third, the confirmation bar. Finally, the third bar must close above the pullback bar's body, signaling a potential breakout. If this sequence occurs, the theory suggests that the price will likely continue upward. Opposite logic applies for shorts. To take this strategy to the next level, I've included additional rules that were recommended by DataTrader. First, EMA trend filter. Use a 50-length EMA as a trend filter. Long entries are only allowed above the EMA, ensuring we trade with the trend. Second, overextension filter. Avoid entering when the price is overextended to the upside. I tested two approaches for this, using the RSI to limit entries below the 80 level, employing a moving average distance limiter to ensure the price isn't too far from a specific moving average, and after testing I found that the moving average distance limiter is more effective. And third, the momentum confirmation. We only enter if the price is steadily trending upwards. This will increase the probability of a winning trade. For this, you can use indicators like the ADX with a limit level and an EMA, or the trend momentum oscillator. In this case, I use the ADX indicator with an EMA to make this rule objective. The rule is simple. Long entries are only allowed if the ADX is above both its limit level and the EMA. Talking about the stop loss and take profit placement, DataTrader suggested that the stop loss should be set at the pullback candle's lowest point, including the wick, and the take profit level at a 1:2 risk to reward ratio. With a 1:2 risk to reward ratio, the strategy will be break even with a 33% win rate, and obviously will be profitable with a higher win rate. And with that, we turn this strategy into a 100% objective rules-based strategy that can be coded and backtested. So now, the next step is to set it up with our pattern analyzer premium script and check out the backtest results. Let's do that. By the way, if you want to try out this pattern analyzer script and all my other premium scripts, you can get access to these and to all of my strategy optimizations by becoming a Smart Trader tier member on our Patreon. And the best part, these scripts can be turned into automated trading bots with 3 commas, Wonder Trading, or dozens of other automation services. Okay, now let me show you how I set up the original strategy on the pattern analyzer script. Here you can set up the first candle, then the second candle, the third, and the fourth. Below this section we will have our filters and our position management rules. Okay, now let's set up the original strategy. In this case, the candle 1 will represent the confirmation bar or the breakout bar. This candle needs to be green, so I set it to bullish. And the confirmation candle always needs to be bigger than the pullback bar. So I use the candle ratio comparison function. I set the other candle number to 2, which is our pullback candle, and I set it to be at least a 1:1 ratio. This means that the confirmation candle should be at least the same size as the pullback candle. Moving on to the second candle, that will be our pullback candle, and it should be red, so I set it to bearish red. and its body should not be bigger than 50% of the igniting bar. So I again use the candle ratio comparison tool, and the candle which we need to compare this one is the third candle, which is the igniting candle. So as the pullback candle can be bigger than 50% of the igniting candle, I set the minimum ratio to 0 and the maximum ratio to 0.5. Moving on, the last candle, or the first, depends on how you look at it, the igniting candle, which should be bullish or green, so I set it to green. And its height should be relatively big, so in this case I use the average candle height on the US30 1-hour chart, which is at 0.20. That's why its candle height is set to a minimum of 0.2% and the maximum to a 100%, because it can be as big as it has to be. Okay, now the stop loss and take profit levels. DataTrader said to use the pullback candle low to place the stop loss at, so I set the candle lookback to 2, which means that the script will take a look on the breakout candle and the pullback candle and will put the stop loss to the lowest point out of those two candles. Also, I set the risk-reward ratio to a 2, which means the take profit level will be at a 1:2 risk-reward ratio level. I set the script to enter on all trades, which means that we can open a new position even if we are already in one. Here is the trend filter setup. I am using the EMA with a 50 length. The source is set to close. This simply means that long entries are only allowed if the candle closes above the EMA. Next, to ensure that the price is not overextended and still have room to the upside, I used a distance type limiter. This filter will measure distances from a set moving average, which you can see with these green areas, and won't let any trade entries occur if the price closes outside of these bands. I use the same moving average as for the trend filter, which is a 50 length EMA. The low limit is set to 0, and the high limit percentage is set to 0.8. I found this to be a correct value. And finally, to ensure that the price is trending upwards and has momentum, I use the ADX limiter with an EMA. You can see that ADX limiter down at the bottom. These are my settings. I set the high boundary to 100 because we don't need a high boundary, and the low boundary, which should be the minimum value for a very long entry, to 20. I'm using an EMA as the moving average for the ADX, and it is set to a 5 length. So basically we will only allow entries if the ADX, which is this red line, is above the 20 level and also above the ADX base moving average, which is this white line. So now let's see the results. For position sizing, I am using a 1% risk per trade. So basically we risk 1% of the total capital on each trade. I didn't apply any commissions as I just wanted to show you how the original strategy performs. The backtest time interval will be the last 4 years. Let's see. Well, it is profitable, but generated only 5% net profit with a 10% maximum drawdown. So if I maybe increase the position sizing, the net profit would be at around 10% with a 20% maximum drawdown. The win rate is 40%, the script generated 40 trades in this period, and the profit factor is 1.2. Okay, so the original strategy wasn't as profitable as claimed, but that does not mean that it is completely useless. As I said, I optimized the strategy and actually got amazing results. Let me show you that, then I will explain how to set up and trade the optimized strategy. Okay, this is my optimization settings. Keep in mind that is way different than the original 3-bar pattern, but I use an optimization software that helps me get these results, and these are the values that came out to be the best. I used a few additional filters to improve it even better, but let's see the results. For the backtest, I am using 2.5% risk per trade, and I added a 2.4 USD per contract commission and a 40 tick slippage. These fees should be realistic with most of the brokers. And here are the results. I optimized the strategy from 2020 1st of March till 2024 the 1st of March, and during this period the script took 265 trades, generated 280% net profit with a 33% win rate, 1.7 profit factor and 25% maximum drawdown. The equity curve looks pretty great. We have a few slight pullbacks, but it always managed to recover. So this is the in-sample backtest data, meaning I optimized the strategy for this period. The real test for every strategy is how do they perform outside of the optimization range. So now let's take a look on that. I will set the start date to 2024, 1st of January, and the end date to 2024 to 1st of August. And as you can see, outside the optimization range, it is still profitable. The max drawdown is well in my limit, and we have a 13% net profit too. I know that 13% might sound a bit low, but you can always increase the net profit value by increasing the position sizing, but keep in mind that also increases your risk. I also took a look on how the strategy performs starting way back from 2016. Let's see that. So I set the start date to 2016, the 1st of January, and leave the end date as it is. Technically, the 2016 till 2020 range is also out of sample. And well, just look at that equity curve. These are the type of equity curves I love to see. No huge upswings, then pullbacks. It is gradually trending upwards, following a straight line. For those who are interested, here is the performance summary. And now let me explain how to trade this strategy. Also keep in mind that this is a simplified version of my actual optimization, because I wanted to give you a strategy that you can trade manually. Okay, for those who want to trade it manually, let's add the indicators. First we will need a moving average simple, or SMA. So type in moving average simple. Add this one to your chart. Then we will need one double exponential moving average, which is the EMA for short. Add this one. And finally, we need to add the ADX with an EMA. So type in ADX, add the average directional index, and then type in EMA, and add the moving average exponential. Okay, these are all the indicators that we will need. If you don't know how to put the EMA on the ADX, let me show you. Just click on it and start pulling it down until you reach the ADX. Once you're there, just release it. This way, the EMA will be displayed on the ADX. If you want to set it to move according to the ADX value, just open up its settings and set its source to ADX. This way now the EMA moves according to the ADX values. For the SMA, which will be our target price limiter, more about that later, its length needs to be set to 125. You can leave the source at close, and I change its color to red. For the DEMA, which will be both our trend filter and the distance limiter, we'll need to set a 60 length, and the source can be set at close. For the ADX, we will use a 6 value for the smoothing and a 4 value for the length. And finally, for the ADX based EMA, you should set its length to 15 and its source to ADX. I also colored it white as usual. And now let's go over the entry and exit rules. As I said before, this is a long only optimization, so we won't go over shorts, just longs. Okay, here is a valid long entry signal. For a very long entry, first the signal candle needs to close above the 60 DMA. This blue line is the 60 DMA or trend filter, and the price closed above it. The next rule is that the signal candle needs to close within 1.5% of the 60 DEMA range. You can see this highlight that is created by our script. This will be the 1.5% distance from the DEMA. But if you want to trade the strategy manually, just go over to the left side, click on this arrow, and click on the date and price range tool. Now find the signal candle, click on the DEMA on that candle, and start measuring upwards. And here you can see that this distance is the 1.5% distance from the DEMA, and the signal candle closed well within that range. So we still got a very long entry. The next rule is that the take profit level does not cross the 125 length SMA. So this is one of the extra rules I added to make the strategy even better. Usually when price needs to cross a significant moving average level, it struggles to go above it, and sometimes those moving averages can reject the price, causing it to pull back. That's why I won't allow an entry if between the entry price level and the take profit level we have a 125 length SMA. In this case, here is the 125 length SMA and it's below the entry candle, so this is still a very long entry. Next, the ADX needs to be above the ADX based EMA. And here on the bottom, on the signal candle, the ADX, which is the red line, is well above the ADX based EMA, which is the white line. Moving on to the fifth rule. In the last 25 candles, no candle has a bigger body than 2.9%. So basically, if out of the 25 candles before the entry signal, we have only one candle that's body is bigger than 2.9%, it won't allow the trade to happen. Big candles like that usually signals market manipulation or just an overextended price. Now I won't go over all the 25 candles, but trust me, I checked them and none of them has a higher body than 2.9%. Moving on to the 6th rule, we need a green igniting bar. The igniting bar is the first bar out of the 3-bar pattern, and as this is the signal candle or the confirmation bar, this will be our pullback bar and this is our igniting bar. Obviously, it is green. Next up, the igniting bar body in percentage needs to be 0.05% or higher. It's simple to check. Up here you will always see how big the candle body you are currently pointing on. So let's check. And it is 0.31%, so it is bigger than 0.05%. The 8th rule is that we need a red pullback bar. As I said earlier, this is the pullback bar and it is red. The 9th rule is that the pullback bar ratio to igniting bar ratio needs to be 0.05 or higher. So now we need to find these two candles. This is the pullback bar and this is the igniting bar. A 0.05 ratio in this case means that the pullback bar's body needs to be at least 5% of the igniting bar's body. Just by looking at these two bars, we can easily observe that the pullback bar is around 20% or more of the igniting bar. So this rule is also met. Bear with me, we are almost finished. The 10th rule is that we need a green confirmation bar. The signal candle is the confirmation bar and it is green. 11th rule, the confirmation bar ratio to pullback bar is 0.5 or higher. That means that this bar needs to be at least half the size of the pullback bar. I know in the original 3-bar pattern, the confirmation bar needs to be at least the same height as the pullback bar, but as I said, I use an optimization service to get these results, and these values came out to be the best. In this case, the confirmation bar ratio to the pullback candle ratio is obviously bigger than 0.5, it is around the 2 ratio now. And the final rule is that the confirmation bar body in percentage is 0.1% or higher. Again, just bring your cursor on the confirmation bar and look at the top middle, just under the indicator section. There you can see how big this bar in percentage is. It is 0.12%, which is bigger than 0.1%, so this rule is also met. And now we can finally say that this is a valid long entry signal. The stop loss should be placed at the lowest point of the last 3 candles. That candle is 1, 2, and 3. So it will be placed right there. The take profit ratio is relatively big, a 1 to 4.6. But again, these values came out to be the best. So let's place our entry and find where that 1 to 4.6 risk reward ratio is. Stop loss here. And that will be somewhere around here. You can also see that green line generated by the pattern analyzer script. And that is where the take profit level will be placed. Okay, this position is all set up. It will be left as it is, no trailing stop losses, no move stop loss to break even, just a simple take profit and stop loss level. Either gets hit, that trade will be closed. But you also have to keep in mind that this optimization enters on all signals. So if we move to the right side, here we have another valid long entry signal. That means that entry level will be right here. And a new stop loss will be placed right there, and another to the top. Keep in mind that the first trade's take profit and stop loss levels will not get moved because we opened a new position. These two trades will be handled separately by the script. And as you can see right here, both of the two trades hit its take profit level and they exited the position. And that's all for this strategy. I know keeping track of all of these rules are pretty hard. That's why we are using premium scripts just like this one. If you want to get access to this, just go to our Patreon and become a Smart Trader tier member. And that wraps up today's video. Did you find this strategy interesting? Have you traded a similar one before? Let me know in the comment section below, I'd love to hear your thoughts. If you like this video, drop a like, subscribe and turn on the notification bell. It really helps out this channel. As always, thank you all for watching, have an amazing day, and until next time, trade smart.